Hi guys, it's Maynard on Tuesday with our close of business report. This week we're going to talk about OPEC Plus, and in particular we're going to dig in on Russia. We're really excited to have Alex Zaslavsky with us today. Alex is a founding partner of Horizon Access, which is an energy advisory firm. They specialize in above ground risk all around the world, meaning what are governments doing and thinking, particularly in emerging markets. So welcome, Alex. We're really happy to have you. We also have a returning TPH veteran, Dave Purcell, EVP at Apache of Development. He is a founder of TPH and was a longtime expert in the macro for us. Colin Fenton is back with TPH Commodities, Matt Portillo, co-head of research, and my co-anchor, Mike Bradley, energy equity strategist here at TPH. So let's jump in, guys. Alex, we're super happy to have you. I think I would dare say most of us tend to think we might understand a little bit more about Saudi Arabia than we do about Russia. Frankly, they're both hard to understand. But what would you tell us about what's going on in Russia, the players, the people, the debate? I mean, what is it like in the corner office, so to speak, in Russia? What are the dynamics? What's the conversation?
Well, first of all, thanks very much for having me with you today. The thing about Russia is that there isn't one team there. It's not just a monolithic entity that is negotiating with the Saudis or the Americans and trying to figure out how to conduct business in the oil market. There is Putin, who has his own interests. He is advised by a very narrow group of insiders. Private oil and gas executives are not within that group. They are pretty much on their own. And then there's a wider sort of business community and wider population. And all those people, all those groups have different interests. So it's easy to say that Russia is losing a lot with the lower oil prices. Of course, it's true. But is Putin losing a lot? That's the real question. As you know, Putin started the year with this very rapid constitutional reform that was designed to keep him in power for forever, really, for another 12 years after his current term expires in 2024. He'll have a referendum to seal the deal later in the year. The parliament has already approved it. And it was interesting that when he made one of his speeches kind of accepting the honor of that the parliament gave him to stay in power for another 2 terms, he said that, it's not just our unique experience to extend presidential terms. Other countries have done it as well. Look at the US during the Great Depression. So his logic there is that, during the times of economic crisis, it's not such a good idea to change horses midstream. And in some ways you can then say, well, if the situation in the economy was solid, it would be a bit harder for him to stick around. While during the crisis period, it's a bit easier. And of course, now with the pandemic, any formal opposition activity is constrained and pretty much impossible. So that's the quick on the different motives that we see.
Interesting. So who's in his office saying we should go back to the table, we should cut? Who is the champion in that department?
If I were to pick one, that would be the finance minister, Anton Siluanov.
Okay.
Putin historically has a lot of respect for finance ministers. They give him this kind of unvarnished picture of the state finances. The strange kind of aspect of the current situation is that the author of the decision to break away from the OPEC Plus negotiations is Igor Sechin, Rosneft's CEO, who has this reputation of a sort of enfant terrible of the oil sector. He inspires just terror in the hearts of people. Everybody in the government and around the oil industry is quite fearful of him. He has destroyed his opponents, some of them quite physically so, over the last few years. For instance, he managed to jail the former economy minister who opposed some of his plans, and that was 3 years ago. And this is not the only example. In any case, it's pretty difficult to find the chorus of people opposing him. But the decision to break from OPEC Plus, which he inspired, doesn't have any supporters. It's very difficult to find people who would sort of enthusiastically approve of it. People toe the party line, and they find justifications for it, but nobody is actively arguing in favor of it. And instead, there is this sort of quite muted but still palpable sense that people think it was a terrible mistake, which it was. And Siluanov is somebody who is able to sort of vocalize it, to bring it to Putin more directly.
So I guess one question, and I'll ask Colin and Dave and Mike, Matt, anybody comment, please. But the Russians, it seems like they have the image of being economically rational. They seem competent, very aware of what's in their best interests. Whereas we get this image of the Saudis as maybe the command and control is not as good. Maybe MBS is younger or less sophisticated. I don't know exactly how to say it in a gentle way. Do you think this image we have of these two players is the right image? What is the right image? Or is all of that just a bunch of media stuff and, this is like any other negotiation, they're just slowly figuring it out? Let me invite Dave Purcell. You've watched macro negotiations like this forever. What do you make of all these players?
Yeah, so I guess the question is, what is economically rational to the Russians might be different than what's economically rational to us who think about public companies and quarterly earnings reports, and their economic. Putin thinks of economic rationality may be different. I guess that's my question: is how, when you talk about that term, what does it mean? Are they thinking about it in terms of leveraging more geopolitical influence into the Middle East? Are they looking at it from a straight, we need more foreign currency coming in? What does that mean to the folks inside the Kremlin?
Well, that's actually at the heart of the work we do at Horizon, because at the end of the day, we're dealing with human beings who make those decisions. Human beings with the idiosyncrasies, complexes, fears, right? So, which is not fully rational. What Putin did on Sechen's advice was irrational, blindingly irrational from the economic viewpoint, but it was explainable from the viewpoint of his vision of himself and the world, punishing the Americans, right? Calculating that the Saudis have more to lose than the Russians, than the Russian state. Expecting that the economic cost of this decision will not drive mass protests inside the country. These sorts of considerations that have very little to do with the kind of bottom line of how much money will I make at the end. We have this way of thinking about Putin as kind of super rational, calculating figure. But to begin with, he's getting older, right? He has been on this job for 20 years, and for 20 years, all he has heard is a chorus of flattery and adulation, and every day people tell him how great he is, right? I mean, any normal person would go mad, after a few weeks of this, right? And in a way, it's sort of surprising that he's been able to hold it together after 20 years. But it still shows, that he doesn't fully grasp reality that would inform that kind of super rational calculation. He doesn't use the internet, mind you. He doesn't really know how to use the computer. The information that he gets comes on paper cuts that his security services and other sources around him prepare. So to answer your question, it's not a simple cost-benefit calculation.
How about this, Alex? If Putin gets up in the morning, what's the first statistic he asks for? Is it how much money in the bank? How popular am I today? How far down is the U.S. Dow? What would he ask about first?
Popularity is clearly there as a metric that he cares about, and not even he, but the whole entourage around him. So that definitely features into his calculations. Other things I think are more that are on his mind are more ephemeral. It's what's happening in Ukraine and in Syria, for instance. What's happening in the U.S. in terms of this, geopolitical picture. It seems to me, and it's difficult to verify these things, but it seems to me that more and more he is drifting away from cold financial calculations that characterized his first few years in office, which was all about making money, for himself, his friends, the country, to the kind of view of how he'll be described in history books, or what sort of legacy he's going to leave. It's not the kind of he hasn't migrated fully to that worldview, but there's definitely more of this less rational and more kind of personal in his calculations.
Let me ask Mike and Colin.
Maynard,
go ahead, Dave.
Can I pop in? Yeah, so it was an interesting comment. You talked about the chorus of flattery and adulation. I mean, that describes Maynard's existence at TPH. But
knew that joke was coming.
It's interesting because I thought Maynard's comment and your answers were great on this kind of economically rational. My question is, from their perspective, my view has been the Saudis, and neither the Saudis nor the Russians have actually understood unconventional oil exploitation and growth in the U.S. And do they look at us the same way and say, my gosh, is that really economically rational? I mean, how do they view, through that lens of economic rationality, how do they look at the U.S. in regard to all this oil production growth?
Well, I think you're right. I think the Russians have not fully grasped the nature of U.S. shale production. Sechin convinced Putin that a few months or maybe a year of ultra-low oil prices will kill the U.S. shale industry and will basically clear the space for other producers, conventional producers. And that was a significant part of the kind of the motive to break away from OPEC Plus. But on the whole, there are lots of things that they don't understand. I mean, there are some things that they understand well enough, but this it is quite corrupting. When you have assumed the reputation of this kind of super competent, powerful, master of world affairs, and it kind of aids irrational decision making, which we've just seen.
So one thing I was going to ask just Mike and Colin is, you guys are watching all this, the markets are watching all this. I think there's some skepticism that it's remotely possible that that we could have something that really works. That's a separate question. But what do you guys, watching this little mini drama, what are you watching it and thinking, and what are the markets thinking? Colin, I'll start with you.
Okay, great. Well, it's interesting in this question of stability versus rational behavior. If we actually look at the production curves for both OPEC, inclusive of Iran, Venezuela, and the ones who are not parties to the OPEC 10 side of the agreement that is actually governed by OPEC Plus, and we look at Russia, that production curve for crude oil in Russia is actually very stable. It is a straight line for 15 years. In fact, we've been remarking with clients in the last couple of weeks that if I'd given you the observation for January 2005 and a linear equation, you would have hit a bullseye forecast 15 years in advance. And I think, all of us who have tried to guess the nature of commodities can appreciate how unlikely that is in a commodity market. So point one is there is no variance in Russian oil production in any kind of meaningful way when looked at from a global perspective. In fact, if you look at the 2018 OPEC Plus agreement, the Russians promised to cut 300,000 barrels per day. They actually did 160. So on some level, that's something of a masterful stroke that everybody kind of views them as an equal partner with OPEC 10 and OPEC more broadly, and yet they didn't really do anything. And I don't think there is any kind of master strategy here where you could persuade me at least that on that weekend of March 8th, March 9th, that either the Saudis or the Russians or anybody really understood at that moment in time how large the demand shock that was unfolding would prove to be. Perhaps the collective wisdom of the crowd was beginning to understand that it was going to be big. But I don't think when that first story came out of a price war or a war over market share on March 8th, that really the Russians understood that or the Saudis understood that. And just one last point, Maynard. When you then say, okay, well, was it rational at all to show up in Vienna and talk about production cuts? And perhaps it wasn't. It was a day late, $1 short. 1.5 million barrels, even under what we thought was the condition of the world in the first week of March, would not have been big enough. And it's certainly not big enough today. And so then we ask the question, okay, well, what would be big enough? Would 5, 10, 15 million barrels per day? Certainly the bigger the better. History begets history. So the fact that we have a historic demand shock does actually increase the probability that we would see some fairly hefty numbers out of both the Russians and the Saudis. And I think that we have to be open to the idea that the Russians might actually cut by 1 million barrels per day. We may actually see Saudi put 3 to 5 on the table. But a point that Mike's made over and over again in recent weeks is the correct answer. What's the duration? Is this for a month? Is it for 2 months? Is it for a year? Because, of course, the curve we're integrating has to ask how many barrels are there for the entire curve, not just for a day or two.
Mike, what do you think?
Yeah, I'd kind of add back on the back of Colin that there's a difference between fact and fiction. The fact is like Colin said, very mature base of production there. Fact is high water cuts there. And the reality is that they're probably going to be one of the first ones that's going to have to shut in because they really run a just-in-time inventory type system. They do not have the storage. They're one of the few guys that doesn't have storage. And so the irony is they're probably going to be one of the first that's going to have to go ahead and shut in wells. And I don't think they realized that how fast demand was coming off and realized that they were going to be putting themselves in this position. So that is the fact of the matter. Saudi knows that. Russia knows that. And I think that's why, Colin's right. You're probably going to see Russia add a lot more barrels than you would have thought, 2 months ago.
So, Alex.
What's interesting about that, Mike, if I could just make another point on it. If you look at ESPO today, the price on my screen at least is $31.33. And we've seen some stability over the past 3 days with the ESPO price geared towards China. And of course, WTI has had a pretty rough couple of days, down about $4.15. So that's interesting. It does imply that perhaps we have some unobserved movements of crude from Russia into China, and there's something supporting those flows on the demand side, at least in the instantaneous present. But recognizing they definitely have storage capacity constraints.
And look, I'm going to give everybody a warning at the end. I'm going to ask you to predict what's going to happen at the OPEC Plus meeting. So be thinking about your answer. But Alex, and I'll give my prediction, which is not worth much. Alex, we talk a lot about Saudi and Russia, but we're not. If you have massive cuts, everybody's got to participate. So it's more than just these two players. It's all these other guys. It's all these unique relationships. Russia to the Mideast, Saudi to Iran, Iran to Iraq. Like how? Maybe just comment on those other relationships from the Russian perspective and how it affects what they might or might not do?
Well, first of all, I agree with Colin. The Russians have basically been free riding since 2016 without cutting much. And one of the reasons they walked away from this deal is that they were required to implement real cuts rather than fictitious ones. But today they are ready for more. I think the shock has set in. They realized the depth of their mistake. But you are right. Putin has talked about it in a way that all cuts need to be carried out what he called in a partner-like fashion. So it shouldn't be just us, he said. The problem is that his hand is now much weaker than it was in February. What he failed to anticipate is the effectiveness of Saudi's strategy to displace Russian volumes from Europe, where the discounts offered to oil traders by the Saudis are so high that Russian exporters find it extremely difficult to place many barrels, even at $15 or $19 for euros barrel. So to answer your question, yes, of course, he'll have to save face. And it will be much easier for him to do that if his cuts are matched by others. But he knows that the Saudis will demand a lot more over and above the parameters of the deal discussed in February, and his hand is much weaker.
What is the state of the Saudi-Russian relationship in general? Because it seems like these two really don't like each other right now.
They don't like each other at all. The strange aspect of Russian conduct in the Middle East in the last few years is that it has been dominated by the war in Syria. So 90% of Russian policy in the Middle East is about saving Assad. And a byproduct of this policy has been a very strange alliance with Iran, which for Russia really doesn't make sense historically, geopolitically, culturally. The Russians and the Iranians don't like each other that much anyway. There isn't much of a history of any political or economic cooperation. But there has been this shared interest in preserving the Assad regime. So the relationship with Saudi Arabia is clearly impacted by that strange alignment. Putin and MBS have met a couple of times. There was a visit by King Salman to Moscow not so long ago. So on the surface of it, it has been quite civil. And also what is interesting is that when we look at the developments in the last few weeks, Putin himself has never really commented on it. His spokesman, when asked to describe the relationship between Russia and Saudi Arabia, said that it's a good relationship, and in fact, it's a partnership. He said it 2 weeks ago, just as the Saudis were trying to throttle Russian oil exports. So it is visible that the Kremlin has not cut off the options of negotiations, and some second-tier figures in the administration in Moscow have quite vocally called for this negotiation. So it wouldn't be too difficult for Putin to blame his energy minister, Alexander Novak, who was deployed to bring the bad news to OPEC Plus and say, look, he made a mistake, and now I'm coming here as a knight in shining armor and do a deal.
So Matt Portillo, let me get you in here. You spend a lot of time talking to investors. What are investors thinking about all this? Mike, you were saying in the pregame, the stocks are doing a little better than the commodity right now. Matt, what's the temperature in investor land specific to all this?
I think the sentiment in margin, and really what is kind of driving that is the concern around kind of the downside to the commodity price potentially starting to see some mitigation as it's relating to capital allocation going into Q2 in two key forms. First of all, we've seen the first of production cuts announced here, where we're going to have some pretty serious volumes starting to shut in places like the Bakken, but our expectations are that that will grow pretty meaningfully over the next few weeks as producers across the U.S. Start to see in-basin prices really approach cash costs. And so I think that's really going to start to put some downward pressure on supply pretty rapidly here going into the second quarter. In conjunction with that, I think the business model and plans have evolved very rapidly over the last 2 weeks. Most of the producers that we have talked to have effectively torn up their plans as it relates to Q2 and are moving to essentially a frac holiday for multiple months. And as you start to bake that into the forecast, those will start to drive some pretty material downside declines in volumes as we move through the quarter. So I think those two things are starting to align where there is a bit of line of sight to actually starting to see a material rollover in U.S. production. And then in conjunction with that, obviously, the upcoming OPEC Plus meeting will be an important factor. But we're starting to see a little bit of a turn from the focus on the front end of the curve and downside pressure to the commodity as producers are really rapidly responding with capital allocation, and a bit more of a focus on the 2021 plus profile and a potential recovery for the industry as things progress here.
So we think shut-in production in the U.S. now is what, Mike?
We think it's 300,000 to 500,000 barrels, somewhere in that range. And over the next couple of weeks, 3, 4, 5 weeks, it's probably going to be double that, I would imagine. And it's really going to be determined on, what happens to Cushing and PADD 3 storage here over the next, say, 4 or 5 weeks.
So down 300 to 500 now, going to double that in the next few weeks, you said?
Yeah.
And then if so, as the backdrop to this OPEC meeting, what do you think the number MBS and Putin might have in their head about how much U.S. production will be down this year? Dave, you have a view there?
Yeah, sorry, I got dogs going crazy here in the background. So the question, Maynard, was shut-ins versus declines?
Well, no, I was just thinking if so we're down 300 to 500 now. Maybe we'll be down another 300 to 500 in the next few weeks. So we're going to shut in 800,000 barrels near term. If you're the Saudis and the Russians and you're thinking about how is the U.S. responding and kind of sizing your own, how much you might ought to curtail, what do you think the number is those guys would estimate will be down by the end of the year?
Yeah, so let me reframe that. I think it's the question that matters. If we hit tank tops soon, and if we're down 25 or 30 million barrels a day of demand, which I think some people would argue that that's probably the right ballpark, a 10 or 12 million barrel a day cut on Thursday is irrelevant in the near term. So if we hit tank tops, the market's going to force a certain amount of barrels out of the system. Mm-hmm. Talking about 1.5 million barrels a day of stripper well production in the U.S. is probably not enough if we do hit tank tops. If Cushing's full, if PADD 3 is full, if refined product tanks are full, that number is going to go down. The prices, in-basin prices, will go to a point that drives a much larger shut-in. I think Russia is interesting because I think people think about Russia. I mean, Colin framed it really well. Kind of a linear growth. They say they're going to cut X and they cut half X and they get tons of credit, even though X was really small. I think we're at a point where they could easily shut in 1 million barrels a day. And I don't throw that number out there lightly, but when you look at regions around the world that look like the Bakken or look like the Permian Basin, where there's a lot of wells and a lot of wells that are older and more marginal, you have to think about Western Siberia in that context. Tens of thousands of wells producing on lift. Mike said earlier, high water cut, which means high operating costs. And at some point, economic rationality hits Lukoil and Gazprom Neft and whoever the producers are now in that region, and they may want to shut production in anyway. And that could be the leverage that they go to, Moscow and say, look, we're going to shut this production in anyway. And so if Russia comes up with 1 million or 2 million barrel a day shut in, I would argue that's the amount of production at risk if the current situation persists. And, you look around the world and there's other regions that look like that. But I've said this for years, so it's not something new, that the one region in the world that more closely resembles the Permian Basin from well count and type of well is Western Siberia. Other than it's a lot colder in Western Siberia than in Midland. But so that's how I'd frame it. I don't know if that answered your question or not, Maynard, but that's how I think about it.
Well,
you know what I'd say? You've in the last 2 or 3 weeks, what have you had happen in the U.S.? I think most people, if you read any press releases, is talking about the U.S. being down this year 1 million barrels a day, and it's up for grabs in 2021 anywhere from 500,000 to 700,000 barrels a day. Yeah, and that's important. But I think what's really important is you've had two of the biggest global producers in the world, being Chevron and Exxon, really slash capital spending quite dramatically, with Exxon yesterday cutting quite dramatically. They, if I'm Russia and I'm Saudi, you pretty much have brought the U.S. to its knees. I mean, those are the two of the biggest producers, and so that's got to stand for something. And it's right. The market forces are basically cutting U.S. production. Those are two of the last guys that were probably not going to ever go down, and they have basically buckled. So that's a good sign, and that's why I think you're going to get an agreement on Thursday.
Yeah, I think, Dave,
the other aspect of this is reports are that Saudi will go all the way down to 8.7 million barrels a day. What are they doing? They're not breaking a sweat, right? They were at 9.1 how many months ago, or in the low 9s. I mean, so they raised production to 12, so they can cut it back to from 9 something to 12 to go back to 8.7. There's no pain there. What actually have they done? And so I think that's going to be part of the conversation. I think Russia throws in a few, million or two, the U.S. and others. But again, at the end of the day, is that enough? And I think it's going to be fascinating to watch over the next several weeks and months.
So one more question, and then we're coming to Colin. Colin's got the chart of the week. But I think on this OPEC thing, I guess where all of that makes you wonder we might be headed, there's a cut number that needs to happen right now because of the COVID-19 problem. And then there's a longer term, keep the market stable type number. And it feels like, the first number is that 10 to 15 million barrels. And to your point, Colin, for a few months. And then there's a longer term number, which is the 1 to 2 million barrels that sort of keeps it stable. Do we think OPEC is thinking along those lines, that there's a near term cut and then we got to get back together and think about the long term cut? Or what are you guys hearing about that, if anything?
I think that's right. That's how I think about it. I think that's clearly how the Russians are thinking about it. That's how you get the million barrel per day number from the Russians. Let's remember that the tank top idea is not a global storage capacity fill. It's a regional fill. And so already the Rockies, with the latest DOE data, are only 3.5 million barrels away from full storage of working capacity. And sure, they could surge that up to 8 or 9 million barrels. But we're not waiting for the 15 to 20 million global demand hit to be spread equally over the planet. It is always a basin story, as Dave said. So, I think that this movement you already see in the crude diffs is telling you it's already happening. You already have a need for instantaneous adjustments along those pipelines and in that infrastructure. We already have a need in the United States to have that doubling that Mike already talked about. And then when you integrate over the next year or so, we're probably talking about a storage build relative to prior expectations of 750 million barrels to 1 billion barrels. And it has to go somewhere. And, some of it will go into VLCC, some of it will go into tanks, some will go into rail cars. We'll see that as well. But at the end of the day, the only rational way to frame the problem is there has to be some kind of deep vector that looks a lot like the demand cut, and then something over the longer run that does not need to be as deep at all, but it has to be sustained.
Okay. All right. Well, let's go with you, Colin. You've got the mic. Colin's Mensa test question this week was, what is really going on in China? Is China truly turning back on, or is it a bit of a head fake and they're not? And if it's the second one, we're all a lot more worried than if it's the first one. So China time, Colin Fenton.
Well, look, there are clear signs from the first 4 countries that hit the 1,000 case threshold for COVID-19 that they're further along than everybody else. That's just common sense, and the data does bear that out. There was some information this week in the power markets in Italy where there was a bounce in actual power consumption. Now, how much of that is because we're all sheltered in place and there's some movement happening in the mix of demand is debatable. But it is clear that in mainland China, which of course was the first country to enter this experience, there is a resumption of factory activity. We can see that in the independent refineries in Shandong province, right there close to ground zero. Utilization number is back to about 65% for those refineries. That's about where it was 12 weeks ago. So a 3-month round trip, having that number trough at about 37%, just about 6 weeks ago. So clearly refineries are improving. We are seeing some movement in container freight traffic on the coast. We can see that also in freight rates. But, let's be careful, because once we get closer and closer to the consumer, we still see some hesitation. So it would be a mistake to take the bounce that we can see in refinery utilization rates, the draws that we can see in copper stocks. Shanghai futures deliverable copper stocks are down about 12.5% from the high that they registered on a seasonal basis just a few weeks ago. And one statistic that we might look at is jet fuel demand growth. By our number, and we're tracking this daily, the trough in China's year-over-year jet fuel demand was at 3.6 million barrels lost on February 13th. There was an improvement into early March, as we've discussed before. The loss was only about 2.5 million barrels at that point in time. That then deteriorated for another month as the rest of the world entered the pandemic. We saw 3.2 million barrels per day as the year-over-year loss in China. And then just in the past 2 days, there's been a bounce again, back up to 2.7. But, just maybe give you one heuristic for how amazingly large this shock has been, even from a China perspective. When we asked how many people were displaced in terms of rail traffic in the month of February, it was over 250 million people who had traveled a year ago in February of 19 did not travel on the rails in February of 2020. And to put that in context, in the SARS event in 2003, we saw a drop of about 50 million. So this was 4 times larger than the 2003 experience, even from a China perspective. And of course, for the rest of the world, we've never seen anything like this.
So Colin, not to just to try to refine it, at least in my own mind, if China was at 100% in November or December of last year, how far down did it go, and how far back up do you think it's come in terms of economic activity?
As of right now, from the industrial side of things, it's back to about 90 to 95%. So we're only off 5 or 10%. For things that are closer to the consumer, retail sales, and the rest of it, a dive of anywhere from 60 to 80%, depending on exactly what you're talking about. I'll give you one statistic. International travel out of China had 137 flights yesterday in the entire country. That number was 2,645 the same day a year ago. So that's why it's very careful here, or very important to be careful that, yes, you can find signs in power consumption, factory activity, container traffic, copper inventories, prices that would lend you to lean more towards that down 5 to 10% number. but we still have a lot of work to do to recover the consumer economy.
Okay, well, look, as we go to wrap up here, guys, I guess just a couple last thoughts and questions. One, I've noticed a couple of prognosticators have laid out a case that it's going to be really bad. We're going to shut in production. We're going to do damage when we shut in production. It also costs money to bring that production back on. The world plus or minus recovers. I don't know to what level, but the thesis comes together to suggest that you get pretty good oil prices next year, kind of in the mid 50s. What do you guys think of that? Do you think that's what's your reaction? I've seen that in a couple of places. I thought it was interesting. And anybody can respond.
I'll start. I think it's a likely scenario. Again, assuming that the world bounces back to your point, Maynard, whatever bounce back means. Like you shut in production, kind of broadly, there's going to be some friction in getting that production back online. It's going to cost more. Some of it won't come back. So I think that thesis holds. So I think you can get some upside surprise to crude. The other question is, how much headroom do we have in storage tanks? So how much excess storage capacity will there actually be? And how long will it take to work that off? That's a real important question that I think is debated, and that number's all over the place. If there's less extra capacity, if we're on the low side of that excess capacity, it gets really bad really fast, but we can improve off that faster because there's less to work off. If we have 1.5 billion barrels of headroom, we'll get that oil in storage, so it may not be as bad in the interim, but it's going to take all of 21 and into 22, maybe all of 22 to work that inventory back to levels where you can actually see higher pricing. So I think that's a factor, and I don't know how to assess that.
Colin, you have a view on that one? Just how much can we store? Once we fill the tanks, how much did we really store? Is kind of my version of that question.
So, Matt already kind of answered this, just to reiterate it, when he was talking about cash costs. So once you get below this 25, 22 range and you're heading towards these Bakken at 8 and WCS at 4, what's happening there is the invisible hand is tapping each of these producers on the shoulder and saying, it's you. Because there isn't, an OPEC of the United States or Canada, and so it's price that does it through the cash market relative to cash cost. And so once the tap happens and once the production stream is shut in, back to Dave's point, the stripper wells, a lot of them, when they go, they're gone. They're not coming back. And so when you have that process unfold, you can clean up price really quickly. And then another point is, if you're going to do a cash and carry arbitrage and go to the ridiculous expense of using a VLCC for storage at $4 a month instead of 15 to 20 cents, which is what it would cost you at Cushing under normal circumstances, then that inventory is not immediately accessible to be purchased. And so there's an optical illusion that's building here that there will be a lot of oil put into storage, but that does not mean that it's accessible to you at any price where you might want to buy it. And that's part of the reason why you're seeing all of these forecasts, not only in the forward curve, but from the sell-side analysts, of a bounce in price, because there's this concept of, I'm cutting my projected demand for this year, but you got to be careful, because once I get my demand hit, then actually I have a demand increase sequentially in 2021 relative to 2020, even though it may be lower than what I had originally expected for 2021. And that could be 1 million barrels per day increase off of a 2.5 million barrel decrease, if you follow me sequentially. And then if you say, okay, well, what is that price worth? The futures market is already telling us that there's at least a 50% probability of a 4 handle on prompt WTI in the balance of this year. And so the leap to then 50 by sometime next year is not that far to go. The problem is you can't skip the activity in the cash market. You have to have the cash prices and force the supply discipline before you can get the knock-on effects.
Okay, that's a great summary. Okay, guys, so as we wrap up, we got to do predictions for this OPEC meeting. I was thinking of asking you to choose a bucket. Nothing burger, like it's a disaster, everybody storms away. 0 to 5 million barrels a day, 5 to 10, or over 10. I was thinking those might be 4 good choices. If I left out your choice, please just fire it in. Mike, let me start with you. What do you think happens with this meeting?
I would have said probably a week ago, consensus was it's going to be really, really difficult to come up with 10 million barrels a day. I think as you start to work through the numbers now, we look at sort of Saudi maybe delivering 4 million barrels, Russia, 1 million barrels. The U.S. is going to be 1 million and change just because of declines. Other non-OPECs, the Iraqs, Nigeria's, UAE, Kuwait, maybe another 2 million there. You start throwing in Canada, Mexico, and some of these other countries, you can get to a 10 million figure. So I think that's doable. So I would say between 5 and 10 million barrels is where consensus is now.
Okay.
In the markets.
Okay, 5 and 10.
Probably towards a 10.
Out of OPEC plus. Yeah. Okay, Matt Portillo, what's your prediction?
I think I'd agree with Mike. I think the real question is the starting point. So if we're talking about April production with the ramp in Saudi volumes, then I would also place the bet at kind of the 5 to 10 range.
Okay, I know. See, I'm not smart enough to play this game with you guys because you're always like, well, hold on, where am I starting from? Okay, Colin, you're next.
Mark me down for over 10. And part of the reason why I say that is let's not forget there's a G20 conversation the next day. So even if it does lean toward too shallow, we may very well find a non-OPEC answer that follows up on Friday. So from a trading or investor standpoint, I would be leaning towards history begets history. Don't be surprised by a big number.
Okay, Dave?
Yeah, I'd probably be leaning, I want to caveat it, I'd be leaning towards Colin. I think the OPEC plus will end up with something over 10. I think the market demands it. But I think the reality is that is a big fat nothing burger. It is a meatless, bunless, condiment-free hamburger.
Is it like that thing they're serving at Burger King now? Is the veggie thing?
Nothing.
It's not even the veggie thing.
Too little. It is too little in a world where demand is down 20, 25 million barrels a day. It will help in 21. It will help the sentiment and the curve when the market thinks demand's coming back. But for the next 2 or 3 months, even that cut, it's a question of when will it be implemented? When will it be felt to help dent the oversupply? I think the next 2 or 3 months could be really, really difficult. And the real question is, when do we start getting a demand spike back to meet that 10 million barrels a day? So it's good long term. It's okay, but in the near term, I'm a skeptic. So I'm with Colin, but I don't think it has much impact on cash prices in the next couple months.
Okay, so Alex, you have to answer it slightly different. You're Putin. What move do you make this week? How do you play this hand?
You do offer close to 1 million barrels a day cut, but if I were to predict the outcome, I would say that to my mind, it's possible there will be no deal at all. That the level of mistrust between the parties is so high. With insult added to injury, just look at the latest statements from the Saudi foreign ministry and economy ministry, basically calling Putin a liar, calling his energy minister somebody who delivers fake news. I think it's entirely plausible there'll be a proper nothing burger, namely no deal, or a deal that is so limited, around 5 million barrels, to be even more meaningless than the ones that we've discussed.
Wow. Well, we now have a prediction in every bucket. And I usually like to be the optimistic one in the group. Listening to all this, I just don't see the Saudis and the Russians. These guys can't even agree on the meeting time. I'm a little bit prepared to be disappointed. But so I'll go 0 to 5. That way, I think we have almost every data point covered. Anyway, I want to do a particular thanks to you, Alex, for joining us. It's fantastic to have you. Dave, we still have a bust of you in the lobby. Thank you for all you do for us. And Matt, Colin, and Mike, thanks for joining every week and doing everything you do. So thanks, everybody, and please stay safe out there.